active. Brandon, wait. Okay, wait. All right. All right. So let's stop that. Let's do this. And we should be live on YouTube. This screen right here should be live on YouTube. Somebody want to check that out? That would be perfect. Jimmy, how you doing? What's going on with Tesla? Oh my goodness. Why does someone want to ask me about Tesla? Holy cow. All right, Richard Bruner, sit tight. I'm going to go over it in a few minutes. I'm just saying hi to everyone first. Do you have enough to get off here? I have no idea. What up, James? Michael? Hey, Jessica. What's up, James? BK. What's going on with Tesla? Jimmy. Hey, James. Milton, you're live. It looks good. Cool beans. Thanks. Do you recommend dividend stocks later in life and growth stocks early on? I hate the Antichrist. Well, alrighty then. I know who that is. Can we look at? Yeah, we're gonna look at Siri. Junk removal, demolition. Cool beans. Way to go, Alvin. All right. What do I think of Siri? All right. We're gonna take a look at Siri. We're gonna take a look at Walgreens. We're gonna take a look at Apple. Thank you. Alrighty then. Guy had a good day today with my dividend payers. Cool beans, Guy. Alrighty. Now, let's get the ball started. Let me blow my nose first. I hate this time of year. 60 years old, and the only ailment I have is post-nasal drip syndrome. And I refuse to take medicine for it because I don't trust those. Do you think Tesla tomorrow? Thanks. How you doing, Piero? How you going? Pfizer looks good for Monday. Thoughts? We're gonna take a look at Pfizer also. All right. First off, let's get over with the disclaimers. Number one, I'm not a financial advisor. I'm not an attorney. I'm not a bookkeeper. I'm a nothing. I'm a nobody. Okay. Got out of high school, joined the service, got out of the service, joined my own business, and I've been doing that ever since. I didn't do the college thing. I don't have a college degree. I'm not a mathematician. I'm just some guy that got fed up with the crap I was being fed, and I knew there was another way around it. So I looked, and what spurred it on was in '08, my 9-year-old daughter, she wanted to learn to trade just like her dad was. So she said, Daddy, can you teach me how to do this? So I had a challenge. Here's the challenge. How do you create a trading strategy for a 9-year-old that is simple, safe, predictable, consistent, and no way for her to lose? And I get nothing against women whatsoever, but when a girl cries, it breaks my heart and I feel terrible. I'm up 2% on Ben. Cool. Over the dividend that will be paid out tomorrow. I should have sold. Yeah, Chris, I never like carrying into the dividend date or getting too close to it. I like 2 weeks out. 2 weeks out, get my 1%, get on out because I don't want to go to the dividend. Once you get to the dividend, the stock has a tendency to drop. Stocks go up before the dividend, stocks go down after the dividend. So I like to get in before, get out before it pays out. Not broadcasting on YouTube. Uh-oh. Uh-oh. It says we're broadcasting. Hold that thought. Let's go check. Simone, how are you? All right, I'm going to check real quick. Milton. You're okay. Yeah, I got 2 lives right here. 1, 2. Okay, I do 2 lives on YouTube. One is going to be the screen itself, this screen, and the other one is going to be this. So why is this one looking like that? All right. Inspire me more. Cool beans. Invite dividend stock talk to join. Oh, let's go. I'm new here. Road Warriors. Sit, chill. We're gonna go over everything. I go over everything every night. Right now, we're just double checking to make sure the YouTube was being broadcast properly. So we have 2 channels on YouTube, one on Facebook, one on Instagram, and one on TikTok. So I'm going to be adding more cameras eventually, but at the moment, I'm still trying to get in the swing of things. All right. Okay, Colin, we are going to look at Walgreens today. Just sit tight for a second. I have to finish going over the disclaimer. So I'm in no professional whatsoever, any shape, form, or anything. The only license I have is a driver's license. That's it. Okay, so I don't do, I I don't do cryptocurrency. I don't do futures. I don't do. I don't use that other one. Instagram. No, 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 no. Telegram. I don't use Telegram, and I don't use that other one. Damn it. Telegram. WhatsApp. Yeah, I don't use WhatsApp. I don't use Telegram. So there are, as I know at the moment. Okay, I'm going to show you in a little bit. Just give me a second while I finish up with my disclaimer so I don't get in trouble. I forget what I was saying. Don't get old. It's no fun. You forget things all the time. Oh yeah, so I'm basically nobody. I'm just going to show you what I do. I'm not telling anybody what to do. I don't give any advice. Okay, I will tell you what I know, but it's up to you to verify what I say. Just because I say something, don't take it to heart. I got the charts here, which is live from Thinkorswim, which is available through Charles Schwab. I don't get any compensation for that whatsoever. I've been using this thing for over 15 years. I love the trading platform. It was created by a trader for traders. Anything you could possibly think of is going to be in there. Social media is a liability. Yes, Milton, it is. But I'm assuming, and I've already said, you guys are all adults. Take your own due diligence. Don't listen to a word I say. Okay, I'll give you an idea, and it's up to you to do the research to make your own decisions. Okay, so this information you can get anywhere online. Basically, this is just a chart of whatever stock we're looking at the moment. Over here, you have the trade grid, which gives you the open, the high, the low, the close, all that kind of nice neat stuff, and the volume on the stocks that we're going to be looking at. Just below that, that's a little better. Just below the trade grid, where you find out all the numbers on the stock, is the option chain. Okay, we're going to look at all these bunches of numbers. You're probably not going to be able to see them on your phone or your tablet. That's why this screen is live on YouTube. Go in the living room, pop a cold one, kick your feet up, put the big screen on, and look, you'll be able to see the numbers. Okay, if you're interested in that manner. Okay, other than that, the trading strategy is pretty simple. Has to be simple, safe, predictable, consistent, and no way she could lose. Because if the little girl starts losing, she's going to cry. And if she cries, I'm going to feel bad. And if she cries, then the mom's going to get all into it. And then mom's, and yeah, it's just big mess. So it has to be simple, safe, predictable, consistent, and no way she could lose. Great. That was my challenge. What did I come up with? 5 rules. Rule number 1, never buy something you don't want to hold long term. If you don't know what the company does, or who's running it, or any of the fundamental information, you can't really see them on YouTube either. Get a bigger TV, Chris. This one is what, 60 inches? I wanted an 80-inch, but my son said no. Anyway, this is his house, because if you guys don't know, I'm usually up in the Boston area. I'm down here taking care of some personal stuff. Anyway, so back to where I was. I'm just going to show you the numbers. I'm going to show you what I do. I will take a look at some of the stocks that you guys want me to take a look at. I'll answer the questions you want me to answer. Okay. What happens to the tech stocks? Vegas. We're going to get into that. I don't really itemize the stocks by their fields of expertise. To me, the way I figure out my stocks, it's very simple. It's old-fashioned. It's so old-fashioned, it is actually pitiful how simple it is. Yeah, Vegas. I get that. All right, so I categorize my stocks simply. The 5 rules. Rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. Rule number 3, make sure the company has 20 years or more of increased dividends. I want a company that is consistently profitable. A dividend is nothing more than investors, that's you and me, the investors' portion of the company's profits. So if a company has been profitable every single year for 20 years and it increased the amount of money they share with me, that works for me. Okay? 20 years of increased dividends, weekly options. I do not like monthly options, and I do not like stocks that don't have options. I'm looking for a safe, predictable, consistent 1% trade. What stocks am I looking at for Monday? Yeah, we'll talk about that on Sunday. Where was I? Weekly options. Okay, so how do I get 1% per week? Safe, predictable, consistent. I use nothing but pre-qualified dividend stocks and those 20 years of increased dividends. How far out of the EX date do you buy? 2 weeks. Yep, 2 weeks. On a Monday. 2 weeks on a Monday. Yeah, weekly options. I want to get paid every week. Okay, I look for a safe, predictable, consistent 1% per week. The only way I can do it safely, predictably, and simply, Scott, how you doing? The only way I'm going to be able to do that is to make sure it is simple, safe, predictable, consistent, 1% per week, and that is using weekly options. Join together with the companies that have 20 years or more of increased dividends. Foles, why are you so into dividends if you sell before the EX date? I'm not looking for the dividend. I use the dividend as a precursor to tell me when the stock's going to go up. Each one of these dots you see represents a company. I'm going to get into those in a second. Hold on. 4 dates you need to know when it comes to dividends. The announcement date, easy enough. The dividend date, the EX dividend date. That is the last day the stock trades before the dividend is paid out. So if you want a dividend from any one of these companies, Pfizer, Procter & Gamble, General Electric, Lowe's, Verizon, AT&T, General Mills. What always seems to get me? General Mills, Comcast, MasterCard, so on and so forth. If you want one of these dividends, you have to buy it before this date with the little green dot. Okay? The 23rd, 22nd, the 9th, the 1st, the 4th, whatever. If you want to click a dividend on a stock, you have to buy it before the EX date. That's date number 2. Date number 3, the date of record. The date of record, basically, whoever owns the stock on that day is entitled to the dividend. Your residents, how's it going? Gonzo, you really don't want to ask me about SCHD. It's a turd, big fat turd. And if you really want to hang out a little bit later, I'll tell you exactly why it's a big fat turd. But let me finish my example. So if a stock increases in price before the dividend date, I want to jump in 2 weeks before on a Monday. And then I want to do one of the safest trading strategies there is, a covered call. You buy the stock, you sell somebody the rights to buy it from you using a call option. That's where options come in. That's where the weekly options come in. Yes, get to the turds. Yeah, SCHD, that will be the first one. We got 122 people. You guys, like, share, subscribe. I want a lot more people here why I think SCH is a turd. Okay, so one of the safest trading strategies there is buying a stock. Okay, you got to buy 100 shares of stock to do one contract, one option contract. There's calls and puts. I don't take air puts. They get really confusing, and especially trying to explain it to a 9-year-old, so it had to be simple, safe, predictable, all that kind of nicey stuff. So buy the stock 10 days before the EX date, do a covered call against it, collect the premium, and usually the premiums are 1% or more of the stock. Okay, that's why I like dividend stocks, specifically those that are consistently profitable. Okay, there's 9,567. We might get a chance to take a look to make sure that number's still the same because it changes every week. So I rotate my stocks. So out of that 9,567 stocks, only 300. Hello, Charlotte. So I only look at 300. So 98% of what's going on in the stock market, I really honestly don't care. Honestly don't care. And when you guys give me a stock that's going to be a turd, I'm going to tell you. And that's just my opinion, because I don't like wasting my time on something I'm not going to get. Okay, if you put up a stock and I take a look at it and I'm going to say nope right away, it's usually the reason for that. If I look into it deeper, I'll give you the exact reason for that. Lockheed Martin, your opinion. I like Lockheed Martin. We're going to talk about that in a minute. What kind of cash flow are you looking for in a company? Jimmy, I don't care about the cash flow. Honestly, and I feel like you didn't hear what I said. The only thing I care about is increased dividends. Okay, how that cash flow is totally irrelevant to me. Because if they have 20 years of increasing their dividends, it means they're more profitable year after year after year. More and more and more and more money is being paid out to the shareholders. And when we buy and sell stocks, we are the shareholders. So hey, Akuna's here. I only want to invest in companies that are continuously profitable. I don't care about the cash flow. I don't care what's going on legally in the company if there's a big lawsuit. I really don't care because I want consistent increases in dividends. That means they're consistently profitable over and over and over again. I like Visa, CCL. What was that? Never even heard of it. Okay. And thank you. Thank you, Ian. Thank you. Thanks. Okay. What was I saying? Oh, that's my only concern. Increase dividends consistently. That means they're continuously profitable. Now there's 300 companies, more than enough for me to choose a decent stock. Hey, Doc's here. 300 companies is enough for me to pick one or two every single week. Okay? Hey, Eric, the big, what was that? Michael? The big buy. All right, so I take all my stocks, all 300 of them. Now I'm going to tell you the Dividend Kings, Dividend Aristocrats, GGG. Oh, no, no, no. Sheila, come on. You should know better. Dividend Kings. 54 companies that have increased their dividends for more than 5 decades. That's 50 years. Okay? Dividend Aristocrats, Dividend Champions, both those lists. 64 companies that have increased in more than 25 years. The Dividend Aristocrats, the Dividend Champions. 150, I think it's 150 stocks that have increased their dividends consistently. Carnival Cruise Line, okay. All right. The dividend contenders, 10 to 20 years, 10 to 24 years of increased dividends. And then, of course, you have Warren Buffett's list. Badfish, CVS, and Starbucks. Yep, we're looking at those also. Simone, do you buy many companies or just more contracts and fewer companies? Simone, I like to have no more than 5 or 6 positions per account. I get 6 different accounts. TikTok, hey, what's happening there, dude? All right, let's get started to look at stuff. Do we sell weekly calls? Aqua, yes, we do. What do you think of Ribbon? A big fat no, Michael. That's a no. Do you know why? Ribbon has not given 20 years of increased dividends. Jimmy, oh, GIS. That's General Mills. I like that one. All right. GIS. There we go. All right, I'm going to pick up from last night. If you have 15,000, should you divide it into 10 different stocks? Well, 15, I'd only do 3, 5 grand each, or 2, 7,500 each. But that's me. You have to figure out what is right for you, what you're comfortable with. Okay? Your best bet is just come back every week, hang out, see what we're looking at. If something sounds good and it makes sense. The biggest thing you're going to take away from this is, does it make sense? Okay? And is what I'm looking at and what I'm explaining, does it make sense? I'm not trying to teach anything. I'm not trying to give any advice. I'm just, talking out my how do you play General Mills? You go in and out of stock. That's correct. How do you determine how many shares of each stock to buy? Ooh, that's an interesting question. It's all about the numbers. Okay, if I have $100,000, I do 4 positions, 25, 25, 25, 25. If you really want to get really technical, it's 24,500, 24,500. I keep a little bit aside in case I have to buy something back or I have to make some adjustments. Okay, so 98% of all my money is invested at all times. I have a credit card and a debit card attached to my trading account. I do all my trades on Monday. So that means every Monday I get a fat chunk of change. Okay? If I need anything, I whatever I need, and then the rest of it gets reinvested. That's it. I very little cash do I keep that is not working. James, I was in Florida last week. Almost called you to lunch. You should have. Did you customize the EX dividend calendar or is it standard option on Thinkorswim? It's standard option on Think. Everything I'm going to show you on my computer, okay, is easily accessible for all you guys. Doesn't cost a thing. Thinkorswim doesn't cost a thing. You just got to open an account at Schwab. They'll let you use it for free for a while. And Yahoo Finance. Okay, I could use Google Finance. I could use New York Stock Exchange information. I could use any one I want, but I choose Yahoo Finance because it's easy for me to navigate. Right? And I like simplicity. Simple, safe, predictable, and consistent. You'll be finding I like things simple and safe. All right? Because I'm 60 years old. I have enough money that takes care of all my needs. I don't need to go back to work. Okay? So I do not have enough to put it in one place and gain, what is it, 4% off of to live comfortably? No. I need the 1% per week because that's what my bills are. Anyway, let's get started. We want to take a look at a couple first. Ooh, 145. Let's go over why. Did I miss Siri? Sorry, making dinner for the fam. No, Jess, not yet. We just got done doing all the disclaimers and stuff. TOS is the best free system, but make no mistake, it's for beginners. Yep. Yay. All righty. Yeah, I like Thinkorswim because everything I need is right there. Okay, that's why I like it. And I wish I was getting compensated for saying that, but I don't. All right, anyway. We're going to go over why I think SCHD is a big fat turd. Okay? I forget who asked for it. Who was that asked for SCHD? Don't be bashful. SCHD. TikTok. What city are you at, James? I'm in Sarasota. I'll be in Florida mid-August. Would be a pleasure to meet you. Cool. Okay, Slumdog, QQQI. No. No. You can ask many times as you like. It's going to be a no. Okay, so what we're looking at this moment in time, SCHD, and why I think it's a big fat turd. All right. As soon as I pull it up, very first thing that hits me like a bat in the head, it's a monthly, which means I can only do a covered call 12 times a year. Now, we all know that a weekly optionable stock allows me to do it 52 times a year. Now, I don't know about you. I would prefer 52 little checks rather than 12 little checks. Okay? So, number one, that's why I like it. Now, I'm going to go quick because I think it's a big fat turd. SCHD. All right, SCHD. Here we go. Okay, number one. Okay, now I'm showing you for free, no strings attached. You can do this on your own. You really don't need me. Okay, I'm just giving out free information. The safest trade there is a covered call, right? Safe, predictable, consistent, 1% per week. User PNC, PNC. We'll wrote it down, so we'll take a look at it later. I'm showing you safe, predictable, consistent, 1% per week. If you add it up, it's a little over 50% per year. Compounded is like 62. But I say 50 because some people can't believe 62. Some people can't believe 50. But anyway, back to the point. The yield. Okay, they give you a check every month. Great, whoopee. But the yield, hey, Hollywood's here. The yield, 3.64. Okay, so here's where I could say, first time tonight, what the hell are you thinking? This is paying 3.64%. You can get a government bond that pays 5%. You get a savings account, a high yield savings account, 4.25%. Why are you putting your money into something that's paying 3.6? Okay, so it's a no, number one. And I haven't got you. There's another reason too. We can go to that one too. Hey, Johnny's here. Can I explain why QQQ is a no? QQQI. James, did you send a message yesterday? If you sent me a message from here, I did send you one. Okay. How about price of stock falling like Pfizer, AT&T, Verizon? All right, Aqua, number one. You missed rule number one. Never buy something you don't want to own long term. If you're under the impression you're going to buy a stock and it's going to do nothing but go up, you're sadly delusional. Sorry to be so straight and forward with you. Okay. Stocks do two things and two things only. They do not come to your house, wash your car. They do not fold your laundry. They do not make your bed, put little candies on the pillow. They don't do anything but go up and then come down and then come up. And then that's all it is. It's like a freaking seesaw. Up, down, up, down. That's all they do. If you think you're going to get in and it's going to go straight up, yeah, you're sadly mistaken. It's not the game for you. All right. So the yield on my favorite turd, 3.64. You can go to the government and get a better return than that. Okay, now let's pick on it just a smidge more. We're going to look up dividends and how often they pay their dividends and how consistently they are with increasing their dividends, because that's main concern for me. Okay, now, number one, they've only been paying dividends since 2011. So that's not 20 years. Okay, so that part's a no. Now let's take a look at the dividends. 12, 14, 21, 21, 26, 20, 23. Wait a minute, it went from 26 to 20. Isn't that backwards? Okay. 23, 25, 27, 25. Backwards again. 28, 27, 31, 30, 27. Backwards again. I can do this all day. They are not consistent with their dividends and they're not increasing their dividends, which means they're not consistently profitable. Okay? So if a company consistently increases their dividends year after year after year, basically means that they're a profitable company run properly. Okay? If I'm showing you a way to get 1% per week, which is 50% per year or more, and you want my opinion on SCHD, well, that's my opinion. I have a few more. Oh my goodness, Berg, you just got here. You just missed my turd of the week. Okay, SCHD. Okay, SCHD for me is a big fat no. NTRS, never heard of them. Usually, NTRS. Usually, when I say I never heard of them, either a few things. One, they don't have 20 years of increased dividends. Two, they don't have weekly options. Three, they don't have consistently. Oh, I already said that one. Chart my. I don't know, but I don't know who it is. Slumdog, SPYI. Yeah, no, sorry. What is your best week? This week. This week is my best week. Okay, next week's not here yet. Last week is gone, so this is my best one right here. VOOV. That's a big fat no, also. But I'll take a look at it and give you my opinion why I say no. But just let you guys know, those of you who are new, okay, those of you that are new, I've been doing this for over 20 years. If you put a stock on there for me to take a look at, the chances of me not knowing that stock, okay, basically means it doesn't have weekly options, 20 years of increased dividends. So you're interested to hear VOOV. Nope. There you go. It's a monthly optionable stock, which means I can only do a covered call once a month, 12 checks. No, I prefer 52. Okay, Bergen, yeah, OPTT, that's going to be a no. GPC, now that is a good company. GPC, Genuine Parts Corporation, the cream of the crop when it comes to dividend kings. They have consistently increased their dividends to their shareholders for about 7 decades. Can you imagine that? GPC, 7 decades of increased dividends to their shareholders. That's a good freaking company. Unfortunately, they only have monthly options, so I don't trade it. SWBI, no. When you buy a stock, how long you hold? Preferably a week. GDX, oh, Julie, that's a good one. I'll write that one down, GDX. Okay, I have a whole bunch of stocks I haven't looked at from yesterday, so you guys just hold on. So like Sherwin-Williams, yes, I do, but I believe Sherwin-Williams, isn't Sherwin-Williams a monthly? SWCH, I think it is. I don't know. Fine, 2 weeks up from the EX date, what percentage of your trades get called away? Oh, it varies every day. I mean, every week. You know, sometimes it's 1, sometimes it's 2, sometimes it's all of them. Okay, now I carry in each account, I got 6 positions in one count, 3 positions in another, 4 positions in another, then I got like 30 in another. What's the best yield, M? All right, I don't look at it that way. Okay, so you're asking me a question that's irrelevant. Okay, the best yield for me is 1% per week, which is about 62% per year compounded. All right, VOO, yeah, VOOV, yeah, it's a monthly, so that's going to be a no. I'm not even going to bother with it. All right, so I'm going to move on and get to the list. All right, now this is the list from what you guys asked me to take a look at. All right, this is this week's. This is last week's. This is the week before. This is the week before. This is the week before. I can keep going on, but every night I look at about 50 to 100 stocks. Okay, and since I've been doing this, only 2 has snuck by me. Only 2. All right. Anyway, let's get to looking at something that we like. Something that we like. Macy's. Love Macy's. It's my favorite stock for this year. It has been my big winner of the year. First thing I want to do. Now, we're not going to look at tomorrow's options because they only have 1 day left, and they're basically going to be worthless. Okay, so we're not even going to look at those. We're going to look at next week's options. JPEQ, no. BOH, no. I like saying no. Actually, I hate saying no. Okay? I hate saying no. I would like if you guys actually knew all this stuff. You know, if you think of it, it should be something that's taught in high school. How to balance your checkbook, how to apply for credit cards, how to invest in the stock market. Some stuff should be taught. AB. What the heck is AB? I wrote it down. We'll take a gander at it, Kevin. Okay, so Macy's, first thing I want to look at. Now, we're going to look at next week's options because this week's aren't going to be worth anything because you got 1 day to expiration. Doesn't make any sense. So, first thing tomorrow morning, if I wanted to do this, 1981, that's what I can pay for it. The closest strike price to 1981 is going to be the 20. Okay, and the 20 is going for 36 cents per share. That is more than 1.5% for the week. But the question is, do you like Macy's? Remember rule number 1, never buy something you do not like or you don't want to hold for the long term. Macy's has been in business for over 100 years. They're on every major holiday. Macy's New Year's parade, Macy's Christmas parade, Macy's Thanksgiving parade, Macy's Easter parade. Okay? Does Macy's have a 4th of July parade? I honestly don't know. But they've been in business for over 100 years. Mark, we are going to take a look at Walgreens. Just sit tight. Okay? I'm going to be here till 11:30. Macy's. So like I said, it's a company I have no problem whatsoever holding. If I'm going to buy it tomorrow morning, 1981, I can sell somebody the rights to buy it from me at 20. Or I can do the 57s. Okay, I'm sorry, the 1950s. I can do the 1950s, which is a safer bet, or I can do the 20s, which is a higher rate of return. What SPY looking like tomorrow? Sorry, dude, I don't do SPY. Do you like technology? I love technology. Okay, when I started doing this 15 years ago, we didn't have what we have now. That kind of technology I like. If shares are not called away by EX8, how do you determine the next week's strike price? Nathan, when I buy something, okay, and anytime you buy something, see this mess right here? It's the highs, the lows, all the stuff. We create this mess, you and me, okay, the investors. We create this. We say when it's too high, we say when it's too low, all right? Now, anytime you buy something, that's your entry fee right there. Okay, you cannot change that no matter what you do. If I buy tomorrow morning at 1981, 1981 is going to be my purchase price up until the day I sell it. Okay, I'm going to sell the 20 call option because it's very close. It's the closest one there, and it pays over 1%. Or I could do the 1950s, which pays over 1%. Either one is perfectly fine for me. I have no problem whatsoever holding Macy's for the long term. So if I buy it at 1981, I will write a covered call every single week until that thing goes over 20. It is that simple. Never buy something you don't want to hold long term. Never sell at a loss. Okay? Make sure it's 20 years of increased dividends and weekly options. And then make sure the numbers work. Rule 5, make sure the numbers work. What am I buying it for? What am I selling it for? Then we come to the charts. The charts are fun. Okay? 5 things. You can see a lot of fives. 5 things. The high, the low, where was it, where is it, and which direction is it going? Simple. Okay? High's up here. Okay? Not now. Okay? This is today. Low's down there. Okay? I don't want to be at the high. That's going to be a definite no. At the bottom, I want to make sure it's bouncing off the bottom back to the upside, and I don't want to do it at the bottom. Okay? So between the bottom and the top, that's where we are. That's what I want to see in the 1-year chart. All this stuff doesn't really mean very much because stocks go up, they go down. That's all I do, and I only care about the next 5 to 10 days. That's it. I want to get in on a Monday, and I want to get out on a Friday. For that, we got to break this down to the 90-day chart. Okay, the 90-day chart, we're looking at a couple of things. Okay, first the 5. High, low, was, is, and direction. Okay, high, low, was, is, and the direction. Okay. Hey, right, Hollywood. Okay, so after I see the 5, high, low, was, is, okay, I want to see a pattern. Okay, and it doesn't seem to be a huge pattern here. Down, up, down, up, down, up, down, up, down, up. So look at the weeks, okay? 2 weeks, 2 weeks, 1 week, 1 week, 1 week, 1 week, 1 week, 1 week. So it's having weekly highs and weekly lows. It gives me an idea of where it's moving. Okay, now you can get a 3rd or 4th grader say, yeah, here's the high, here's the low. Yep, it went down, it went up, it went down, it went up, it went down, blah, 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 blah. You know what? Check this out. You might like this. Okay, that might be a little easier for you. Okay, green is up, red is down. Green is up, red is down. Okay, there's a lot of different ways of looking at the charts. I like the candles. Okay, now 1 year looked good, 90-day chart looked good. Now I won't look at the 30-day chart. The 30-day chart right here. That gives me a better idea of the direction in which it is going. Okay, 30 days ago, here we are. Up, down, up, down, up, down, up. It has a pattern every week. Up, down, up, down, up, down. So right now, if she came down right here, there's your bottom right there from this high. Okay, this is your 30-day high. There's the bottom. Turn around, 1 day up, 2 days up. I have no problem whatsoever jumping in first thing tomorrow and buying it at the 1981. None whatsoever. I like Macy's. Macy's has been very nice to me today. Fatima, how are you doing today? All right. Fatima over there on Facebook. Seasonality. Now, seasonality, in case you didn't know, here's a chart right here. January 1st, December 31st. The blue line represents this year's movements. Simba, how you doing? Oh, wait a second, I missed the question. Why do you like candles better than lines? Joe, no reason whatsoever. It's all personal preference. By Monday, not Friday, though, right? Yeah, well, I'm saying if I had any, I don't have any. Well, I think I have 6,000. I don't think it's enough to do anything with Macy's, though. You know, yeah, but I like to buy it on Monday. If I had money, I'd buy it tomorrow. But Monday, okay, after I sell a few things because a few of them are in the money, going to be called out this week. I think I'm losing 3 this week, which is fine, which is what I want to do. I want to buy on a Monday and I want to be gone on Friday. And then I want to be back into cash on Monday. So I have to do this whole thing all over again. Jerry, how are you doing? Now, you guys over here on Facebook, I want to apologize for the camera quality. I'm trying to figure out a new camera for Facebook specifically. I probably should just figure out how to use the damn software on my computer. Do you have to buy 100 shares for options? Yes, you do. 100 shares equals 1 contract. 500 shares, 5 contracts. Can you buy a stock right before the dividend payout and get paid? Big Ange, okay? You have to buy the stock before the EX date. The EX date is the last day the stock trades before the dividend's paid out. Okay? So if you want the dividend, you have to buy it before the EX date. If you buy it after the EX date, before the payment date, yeah, you're not going to get it. All right. The chart here. Blue represents this year. This is the movement for this year. Here's we are right here, almost halfway through July. The red line represents 10 years worth of data. So that's 2014, 2015, 16, 17, 18, so on and so forth. 10 years of data, all averaged out. It gives me an idea of how the stock moves on a regular basis. Because you got to remember, I'm doing companies that have 20 years of increased dividends. So they have 20 years of data to go by. Why am I not using 20? It's too much data. Okay, plus 20 years ago, totally different world. 10 years, I could set it to 5, I could set it to 3, but I like 10 years. So 10 years, this is where we are. What I want to look at, I want to look at this area right here. Because here's July, and this is where we are. I want to see where does it usually go this time of year. Sorry, AB is not 20 years. Yep, probably not. So we're going to go here and drag it forward. So that's going to look at the next 3 weeks. So I bring my cursor to right today. Here's today right here. Okay, here's today right here. Okay, here's where we are. It's going to go up a little bit for 2-3 weeks, and then she's going to come down, and then she's going back up again. That's not guaranteed. That's just looking in the rearview mirror as we're moving forward. That's what it's done over the last 10 years. NLY. All right, NLY down. We'll get to it probably tomorrow night because tonight we have so many to look at. Okay, you guys keep asking questions. It can take longer and longer to get through the list, which is fine by me. I'm here every night. But anyway, just to let you know, I do own Macy's. So Macy's name a new chief information officer. Okay. Should I sell PLTR even if I see it as long-term play? Paxolis. Did I say that right? Paxolis. Cool name. I can't tell you what to do. You have to decide what your goals are, what your risk factors are, what your understanding of what it is you're doing. I just tell people what I'm doing. I can't tell you what to do. Okay? No brick and mortar for me. I'm not quite sure what that means. But, okay. Can you walk us through step by step doing one option order? Yes, I can, Sheila. What is better, options or stocks? I put them together. Okay, remember, Celecio. I want to be a little above beta to SPX. Okay, Palusos, I don't do SPX, sorry. Macy's. When you walk into Macy's and you see dwindling inventory and sales, does it influence your trading? As long as the company is profitable, okay, and they're consistently increasing their dividends, I really don't care, to be totally honest with you, because you can't possibly go into every single Macy's store and see how every single store is going and how everyone is going performing and what their online presence is and what their online sales are and how profitable they are overall. You can't tell that by walking into a store. It's like if I walk into a Walgreens, there's 8,700 Walgreens. Okay, 8,700 of them. So by walking into one or two, that doesn't give you a good idea. How is Macy's profitable due to the way the world is now? Chris, I can't answer questions like that. Honestly, I can't. Okay. Now, if they're continuously profitable and they continuously increase their dividends, I am going to buy them. Buy Macy's at 1981, then buy a call at 19. Why are you buying a call, William? I don't buy calls, I sell them. Okay, so your math is incorrect. Macy's at this moment is 1981. Okay, if I sell the 20s, that's 36 cents. 36 cents is my profit per share. See it? 36 cents is my profit per share. That's by selling the covered call, not buying. Company can be down in sales, but still profitable if they control the PE growth. Yep. What if a brick and mortar is shopping malls and eventually waves? Yeah. You know what, Flipper? That's not what I'm looking for. I'm only looking for the next 5 to 10 days. I honestly could care less what's going to happen in the future, okay? Because the future's not here. I can plan for it as I go week by week by week because none of us is living in the future and none of us are living in the past. We're living it right here, right now. So what's happening right here, right now? Well, this week, I'm looking at Macy's. Macy's at 1981. The profit I'm looking at by selling the 20 is 36 cents. So my profit, 36 cents divided by the purchase price, 1981, comes to a grand total of 1.81%. That's very short of 2%. But here's the kicker. Take a look. If she goes above 20, I'm going to get the difference, which is 19 cents, an additional 19 cents. So this is a 2.5% trade if it goes over 20. When does Macy's pay their dividends? Hollywood. What happens if no one buys the covered call? Do you not receive the premium? All right, Steven in Vegas, you're relatively new at this because if you knew, if there is a price that is posted, okay, if the price is posted here, the market maker is required by law to fill it. The market maker pays an awful lot of money to be a market maker. Now, I've given examples of market makers in the past. Okay, I'll do another one if you guys want me to. But a market maker, last time I checked, okay, this was about a decade ago, it was $350,000 for the application just to become a market maker. Now, market makers make anywhere between $100,000 a day, all the way up to, I've seen a couple of like 10 million a day. Okay, all the size depends on the size of the market. Okay, so the market maker, the difference between the bid and the ask. Okay, if I'm selling, this is what I'm going to get. If I'm buying, this is what I'm going to get. All right, this is what I'm going to pay. The ask is the price I pay. The bid is the price I receive. So if I buy it at $19.81, means I'm paying $19.81 per share. I sell them to someone else. I don't sell the stocks. I sell the option to buy the stock, and it's a weekly option. So as soon as I sell the option, it is the valid contract from that moment until the date of expiration. The date of expiration is right here. 12 July 24, that's tomorrow. 19 July 24, that's next Friday. 26 July 24, that's 2 Fridays away. So on and so forth. Weekly options, 52 times a year. I can do this trade on Macy's. And if you check my history, you see we're in week number 28. And out of 28 weeks, I must have had Macy's for at least 20. So I keep buying it and I keep selling it, keep buying it and I keep selling it. Claire. Okay, take a look at the chart. Now we started in January. Okay, I started this channel here, which you guys are seeing in January. Look at it in January. Okay, she was at 19. She dropped down to 17. Then she went up to 19. Then she dropped down to 18. Then she dropped up. But then she went up to 19 and a half. Then she came down to 17. Then she went up to 22. And she's channeling sideways since the beginning of January. I'd be buying this thing every single week. But once you get a little bit closer, okay, you can't always get them every week. See, this week here, it's in a downturn. This week here, in a downturn. This week here, in a downturn. Okay, up, up. That one gapped up, couldn't take care of that one. But it's all in the timing and the month and the numbers. What am I buying it for? What am I selling it for? And where is it moving? Okay, so if the last 30 days, right here, it gives me an idea of where the stock is going to be in the next 5 days. And that's all I really care about. What it's going to be next Friday. I get paid on Monday, but on Friday, I have to balance it out and see if there's anything I need to do. Okay, so here we are a month ago. She went up, she came down, up, down, up, down. Okay, here's the low here, 1 day higher, another day higher, 2 days higher than that day. That's my clue to jump in. Okay, so You were saying that's not 1%. That is well over 1%. It's close to 2% for the week. That's what I like. I like companies, number one, that I've heard of, that have been in business for a very long time and have consistently increased their dividends over and over and over again. And if the numbers work and the chart tells me okay, then I jump in. Is that simple? Now, somebody wanted me to see me to go through an example of a trade. So let's do it. Okay, this is Thinkorswim. Here is the trade grid where I make up my mind of what I'm doing. So I said I like Macy's right where she is, 1981. Okay, and I like the 20 call strike, which gives somebody the right to buy it from me anytime between when I sell it and the date of expiration. The date of expiration on this one, 19 July, which is next Friday. All right, so what I'm going to do is I'm going to change the strategy. Okay, the strategy: single, vertical, back ratio, calendar, diagonal, straddle, blah 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 blah, a whole bunch of them. Okay, I'm sticking with the simplest, the easiest, and the safest. Covered call. So you come down here, covered call. Basically, that means I'm buying the stock and I'm selling an option against it, giving somebody the right. So I'm buying it at 1980. I'm selling it at 20. I get that 19-cent profit from there, but I also collect the premium, and the premium is 1.8% for the week. And I have no problem whatsoever holding on to Macy's. Still a cash secured put and get assigned the stock. Wheel strategy. Yeah, bad fish, I know that. But you forget you forget the criteria. The criteria of this trading strategy for my 9-year-old daughter. Simple, safe, predictable, consistent, no way to lose. I don't like puts because it gets confusing. I'm an adult and it's confusing to me. Okay? And 9-year-old, I don't think she would have gotten it. And she probably wouldn't have done it, which in this strategy wouldn't exist. So it's simple, safe, predictable, consistent. 1% per week, and I use a covered call using buying the stock and selling a call option to give somebody the right, not the obligation, to buy it from me. Hey, Jerry jumped in over here on Facebook. Tim's here. How you guys doing? It's like I said, I want to apologize for the camera quality on Facebook. I will get to it. I really don't like Facebook because they only put the videos up for 30 days. YouTube will put them up forever. Okay, so I got videos going all the way back to 15 years. Hey, James, still teaching. Great job. Yeah, you can do 4. Dude, I haven't seen you for a while. For striking. Covered calls safe. Yes, they are. Okay, so let's take a look at the 20. Okay, here's the 20 right here. Okay, the 20 is right here. And as you put the cursor on top of the number, it'll tell you exactly what you're doing. Okay, it says buy. Okay, which is the ask. Okay, the ask is what I'm paying. The bid is what I'm receiving. In this position, I am buying a covered call. Made some good money on some puts today. Pitbull, how's it going? In the big fish, and started with this strategy because it's easier. I've expanded to sell puts. Al, you know what? A lot of people do that. What's up, brother? Yeah. Once you get good, you know what? For those of you that are new, find a strategy, perfect it first, get really good at it before you add another strategy. Okay, the cash secured puts are great. The wheel thing, yeah, it's great. However, get this strategy done first. This one's safe, simple, predictable. It can get you up to 50% per year if you do it right. It's really not that difficult. All right. So wherever my cursor is, it'll tell me what I'm doing. Buying. If I move it over to the side, now I'm selling. I don't want to do that. Okay. I want to buy a covered call right there. Click on that, and the order already pops up. Now I have it set for 10, which is 10 contracts, 1,000 shares. I'm going to change it to one contract, 100 shares. That way you guys, don't get intimidated by the big numbers. Okay, so read the orders, and it's 2 orders. Okay, 2 separate orders. One is the stock order where I'm buying the stock. The second is the option order where I'm selling the option. But when I do it this way, they combine them together, so it's only one order, so I'm only paying 1 commission. And they get filled instantly. Okay? Now, it's right here. It tells you the order right here, order entry covered. Okay? And it tells me what the order is. Sell, buy, because I'm selling the call option, and I'm buying the shares. So I'm buying the shares and I'm selling the covered call. All right. The date, the stock symbol right here. The date, 19 June 24th. That's next Friday. The call strike, which is the 20. We talked about this. What it is, the call option, and the stock. Then the price and limit order, day, best exchange, blah, blah, blah. I'm going to change it to market order because market orders fill instantaneously when I'm buying. Now they've tied the two together. All right. So whatever it says is whatever it says. If I do it separately, the numbers can change and move. All right. So next thing I want to do is I want to hit the confirm and send button once. Like that? Once. Click it once. All right. This pops up. This is the actual order. Buy one covered Macy's 100. That's the weekly. 19 July 24. That's next Friday. The $20 call option with the Macy's stock to open to open. Now, to open means I'm opening a stock order, which means I'm buying the shares, stock certificates, whatever you want to call them. And the second one, to open, is I am selling the call option, which is the covered call. I like selling puts on stocks I want to own, so don't care if they get signed. Yep, Badfish, you're absolutely correct. Right, Al, yeah, all that kind of nice, neat, fun stuff. Okay, so after that, that's the order. Now, I like telling everybody to read it out loud because your eyes can deceive you because you have something in your mind what you want to do, and then you just do it. And if you don't read it out loud so you can hear it, you might make a mistake. And trust me, I've done it before. That's why I say it out loud. Buy one covered Macy's 119 July 2024. The call on Macy's, the $20 call, Macy's to open, blah, blah, blah. Okay, underneath that, break even, $19.16. Well, the stock is at $19.81. So if the stock goes up, I'm making money. If the stock stays the exact same, I'm making money. The stock can even go down. Right now, it's at $19.81. It can go all the way down to $19.16. That's break even. So if the stock goes down, well, I'm still making money until it gets to $19.16. All right. Once it goes below $19.16, well, then it's a high probability I'll be taking the stock into next week, doing it all over again. Yeah. Don't lose money unless it goes up. All right. Anyway, very next line, maximum profit, $83.50. I know it doesn't sound like a lot, but let's do the calculation. Get out my trusty calculator, and my maximum profit, $83.50. That's my profit. All right. So what did it cost me? Well, it cost me $1,917. So like $1,917. Okay. It's almost a little bit less than $2,000, but I'm making $83 off of it. So how do I find my profit? Well, my profit's $83.50. What's my rate of return? I divide it by the purchase price. Purchase price, $19.80. Oh, sorry. I divide it by what it cost me, $1,917. $1,917. And if we want to get technical, 15 cents. Okay, the math tells me that's a 4.3% return for 1 week. Okay, did you see that? This is one of the reasons I love Macy's so much. If I'm doing this covered call and it gets filled at the money, okay? If the stock goes up, I make my 4.3%. If the stock stays the exact same, I still make my 4.3%, but I own the stock next week. Okay, if I don't hit my target on Friday, I keep the stock, I keep the money, and then I take the stock into the next week, and I do it again. Okay, so this week, this number right here, 4.3%. Okay, so if the stock goes up, I make my money. Stock stays the same, I make my money, and I hold on to the stock. If the stock goes down, I still make my money and I still hold on to the stock and I do it again next week. This is one of the reasons why I like the trading strategy. It's simple, it's easy, it's predictable. I'm buying it at 1981. I'm selling somebody the rights to buy it from me at 20 between when they buy it and Friday, the 19th of July. That's when the option expires. And then the following Monday, I get to do it all over again on the exact same stock. So I'm making a weekly 1% per week using stocks that give me a very nice return. And I've heard of them. Pfizer. Yeah, we're going to take a look at Pfizer. It's already written down. Okay, so I hope that makes sense. Okay, this right here, Macy's. You ask the biggest question you got to ask yourself. Well, it's a couple of questions. Number one, does it make sense? Number two, do I like Macy's and do I want to buy Macy's? Okay, what happens if Macy's go down? I'm going to hold it for a long period of time, but they increase their dividend every year. So it's a win-win situation. That's why I like dividend stocks, because if Tesla goes down, I don't get any profits. Okay, if that one that Jeff Bezos owns, the stupid smiley face on the trucks, Prime. Okay, if that goes down, you get nothing. Dimon, yep, I like it too. All right, so that's an example. And if I hit that send button one more time, then I'll actually, the order will be open. So that goes that. Let's bust some of this list. Yes, it makes sense. Thank you for the concept. Seems very easy. It's learning how to use the platform. Sheila, like I say, you need some help, drop me a number. I'll give you a buzz, walk you through it. It's not that difficult. I held out getting in and got a couple of puts today and did all right. All right, Pitbull, way to go. What software are you using? It's not a software. It's actually Thinkorswim, which you can get when you join Charles Schwab. So Charles Schwab bought TD Ameritrade. TD Ameritrade bought Thinkorswim from the original creator, who was a trader. Okay, so it was a trading software, a trading platform designed by a professional trader. All cool stuff. Yes, puts are nice today. I agree. All right. On the list, AA, Alcoa. All right. First thing I want to look at, Alcoa, 39.42. They get the third. Whoops. I got to change this back. Okay. That way I can tell you the percentages. Yes. Which are nice. Already got Chuck. Do I use the online version? No. Download it onto your computer. It's much better on your computer than it is the online version. Okay. What stock are you checking out right now? Alcoa, AA. All right, so Alcoa, first thing I want to look at, 1942. That's the purchase price at the moment. I'm not looking at the chart yet. Okay, the only thing I'm looking at is what is it going to cost me? Okay, this is the information that I want. What's it going to cost me? Okay, 39, 40, 39.42, 39.50 is going for $1.23. Are you kidding me? That's freaking awesome. Let's do the quick math on that one. Clear this. The 39.50s, $1.23. Wow, I might do. Oh shit! Wait till Monday. All right, so $1.23 is the profit per share. Okay, and the purchase price 39.42 divided by 39.42. 3%. Holy cow! Now we haven't looked at the chart yet. That's just the numbers. The numbers, if I buy it for right here tomorrow morning. These are the numbers now. So tomorrow, these numbers are all going to change, but the math is still the same. I take, what am I buying it for? What am I selling? The closest strike price, 39.42. The closest strike price is going to be the 39.50. Okay, it's paying $1.23. $1.23 is 3.12% return for a week. That's a nice. I'm writing that one down. Writing that one down. Because I like Alcoa. I do. So let's take a look at the chart. Maybe I probably shouldn't have wrote it down until after I look at the chart. All right, anyway. All right. I always look 1-year chart, 90-day chart, 30-day chart, and then seasonality. Always, always, always. Give me a second. Got to plug a new battery in before I break stuff. All right. Yes, I have to have a batteries powered fan to keep the cameras cool, because the cameras overheat and they turn off. John Uba. Okay. Wait, but there's no dividend date for another at least 2 months for AA. Are you still going to go for it? No, I'm just looking at the numbers. Okay. It's probably earnings week. Okay. Really don't care. Let me go through the numbers. Let me go through the charts and see exactly what I'm looking for. How about Riley? Riley's, okay, I'll write it down. But just to let you know, I've never, ever, ever bought Riley. So Riley's going to be a no. But I'll get to it and I'll tell you why. Hold on a second. Okay, so first thing I want to see. High, low, where was it, where is it, and what direction it's going. Those are the 5 things. High, low, where was it, where is it, where's it going, blah, 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 blah. How long have you been trading for? Over 20 years. Yeah. Over 20 years. All right. Next. I don't want to buy it at a high, which it's not. I don't want to buy it at a low, which it's not. It's somewhere in between. Was I in the way? I was. Okay. The high's up here and the bottom's down here. So I'm somewhere in between. Perfect. I love it. So now let's go to the 90-day chart and see if we can see any patterns. Okay. There's a pattern a little on the slow side. Okay. Down, up, down, up, down, up, down, up, down, up, blah, blah, blah. Okay. 5 things I want to see. High, low, where was it, where is it, and the direction it's going. Hold on a second. Okay, from this, I want to jump in and take a look at the last 30 days, because we see where the high is, we see where the low is, we see what direction it's going. The last 30 days gives me confirmation of where it might go in the next 5 or 10 days. That's all I'm interested in. The next 5 or 10 days. Recon, yo, recon. All right, anyway, enough of that. Okay, here we are. 30 days ago, down, up, down, up, down. Look at right here. Okay, here's your 30-day high right here. She dropped down. Here's the bottom. Now this is we're going up. So tomorrow, if it's an up day, it's a yes and jump in. If it's a down day, then we're going to wait for the bottom. Okay, because here's your 30-day high. What comes after a 30-day high? Well, the next 30-day bottom. Okay, you can't get to a 30-day bottom without getting to a 30-day high. They just follow each other. All right. That being said, I like Alcoa. I just want to wait and see if tomorrow is going to be an up day. Okay. All right. Seasonality. What does it normally do this time of year? I almost forgot that. Okay. Remember, blue line represents this year. Red line represents 10 years worth of data. I want to click where the blue dot is, drag it to the right, and line up the cursor right there. You can plainly see, here we are right here. Here's today. Okay, goes up, pulls back, goes up, then pulls back. All right, to the upside. John, are you watching this live chat? John, you're on YouTube. So the, hold on a second. So the questions, they pop up for like 5 seconds and then they disappear. Okay, so sometimes I don't see them all the time. Hey, Harley Lynn's here. Hello. Now, is this Mrs. Harley or is this Mr. Harley? Set your charts to monthly. Real estate flipper. No, I like looking at the 4 different charts. I like looking at the 1-year chart. I like looking at the 90-day chart. I like looking at the 30-day chart, and I like looking at seasonality. Okay, the way I do things is the way I do it, and I've been doing it for over 20 years. This strategy for 15 years, because I didn't do very good when I was on my own, but my daughter came out with helped me with this strategy. Doc, are there any rules that allow you to ignore the EX dividend date when you're choosing a stock? Yeah, there always are. Both. Well, hello, Mr. and Mrs. Harley Lynn. Greetings. All right, anyway. So I like Alcoa. Everything looks nice. And to answer Doc's question, yes, there are, I always, I bend the rules a lot, but I like to stick to the main rules. Okay, every once in a while, I'll look at a stock, and if the numbers look so awesome, even if they don't have the dividend yet coming up, because if it's on my list, it has to have a dividend, has to increase. I can see seasonality on Thinkorswim app. I can seem to find it. Okay, Recon. I'm not quite sure I understand that question. I don't know. It sounded like a statement, not a question. All right, so let's go back to regular. So I like Alcoa, but I'm waiting for a second update. Okay, here's your bottom right there. This is to the upside. All right, it's a higher bottom. All right, so I like Alcoa. Next on the list, PM, Philip Morris. Recon, you can't find it. All right, hold on a second. All right, Recon, you ready? If you have your Thinkorswim open, first thing you want to do is where you put the ticker symbol in, over here in the quick charts. You slide all the way over on that line until it gets to style. Click on style, window drops down. There's chart mode. Okay, click on chart mode. Another window drops down, and down at the bottom is seasonality. Okay, style, chart mode, standard. Okay, I find that Thinkorswim is a huge learning curve. Well, actually, Flipper. All right. Usually, I call people up and I walk them through all the crap to get rid of because it's not on the app. No, it's not on the app. Okay, it's only on the downloadable version. That's why I tell people download it onto your computer. All right. Philip Morris. Let's take a look at the old smoky smokers. No, I didn't look at anything at the high of the year. Okay, it's actually that quick. Okay, I'm not into the thing. The thing is buying it high, buying it at the high and waiting for it to go higher. Yeah, I don't do that. Okay, it's at the high, it's an automatic no. Okay, I don't even care what the numbers look like. Okay, so Philip Morris is a no. KFC. What the heck is KFC? KFC. Kentucky Fried Chicken. I thought that. Can't find that symbol. Well, can't find a symbol, it's going to be a no. VLO, Valero. All right. Johnny Q. Why I am using Thinkorswim on Android tonight. Can I see the same thing you are? An Android is a phone or a mobile device. Yeah, you have to download. You got to download it onto your computer. Okay, if I don't know if you can do that. How do we join your morning show? Hey, Real Estate Flipper. Hold that thought for a second. Top 5 long-term dividend compounders. Oh, zooped. You just got here. You're on a tablet. Yeah, you're not. I don't think you'll be able to do it. Where was that question? All right. Real Estate Flipper. You ready? Up here, right here, where you see my little face right there, Dividend Stock Talk. Click on that, and that will take you to my website, The 10-Minute Trader. Okay. The 10-Minute Trader. Okay, right here. Live trading online. There you go. Or you can slide down. Safe, simple, predictable, 1% per week. Get the video, tells you all about me, blah, blah, blah. All this kind of nice, neat stuff. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. Okay. Also, live trading. Join our morning trading group. Yep, right there on the website. Then you can look at all my current trades. Okay, every single one of my current trades so far, well, almost all of them, you view right here, and there we go. Okay, it's all my trades so far this year. Okay, now I'm looking for a safe, predictable, consistent 1% per week. Okay, week number one, I share 2 accounts. I got 6 accounts. I share 2 of them with you publicly. Week one, 2.12. Week two, 1.3. Week three, 0.85. Do I make my 1% every week? Nope. I average 1%. Okay. Week 4, 0.9. Week 5, 1.03, 1.06, 1.9, 2.3, 2.32, 4.6. That was a fat week. I like that one. So on and so forth. Okay. We're in week number 28. Week number 28 ends tomorrow. Go back to where live trading right there. There's again. Okay. Here we go. So that's how you join. Zooped. I don't do anything long term. All right. The longest I've ever held anything. I've been trading for over 20 years. The longest I've ever held anything was 9 months. So when you say long term, I'm thinking a month or two. That's just my opinion. Okay. Now, if you want to buy a stock and hold on to it 5, 10, 15, decade, 2 decades, that's up to you. You're at the wrong place. That's not what we do here. COPX. I could say no now if you want, or you can wait till I get to it. All right, so VLO, Valero Energy. Let's take a look at a few things. What I want to see first is what can I buy it for? 148.59. So the 149s right here, 166 per share. Now, I'm not a mathematician, but I do know that $1.66 is more than 1% of 149. Okay, so that's a yes. The numbers work. Next thing I want to see is the chart. The high, the low, where was it, where is it, what direction it's going. Am I at the high? Nope. Am I at the low? Nope. I'm somewhere in between. Awesome. Great. Let's move on to the 90-day chart and see if we can see any visible patterns. Yeah, we can. Take a look at that. That's pretty easy. Down, up, down, up. Look at the distance. That's about 6 or 7 days, about 10 days, about 6 days, about 8 days. And look at this run up. Okay, bouncing here. Okay, we have a new 30-day bottom, which is today. So that's going to be, I want to wait to find the bottom before it moves again. That's as far as I really need to go with this one because there's no sense looking any further because today is the 30-day bottom. Even if I zoom in, okay, it's still not going to change the fact that today is the bottom. Tomorrow might be lower. Okay, the only way you can isolate the bottom is right here. 2 days to the upside, 3 days to the upside, 4 days. Well, there's your bottom right there. It's really not that difficult to see them. Costco. Isn't Costco ridiculously priced? Big fat no, $800 a share. I'm flattered that you think I have enough money to buy 1,000 shares at $800 a share. Asher, 28, how you doing? Okay, I'm kind of flattered. Johnny, I don't know if you need to use Windows because Thinkorswim is available on Apple and on IBM. Uh-oh. All right, Jimmy, can you show us your website, how your weekly calculator works? Oh, Jimmy, that's a good one. I haven't had that question in quite a while. All righty. Weekly compound interest calculator. What is a weekly compound interest calculator? This one is unique. I actually had to create it myself because nobody else could figure it out. What it allows me to do, all right? Very first line, the initial deposit. What am I starting out with? Okay, what am I starting out with? Right? Periodic deposits. The periodic deposits, this is cool. Nobody else has that. Okay, I can put in $5 a week. I can put in $50 a week. I can put $500 a week. I can put $279.13 in bi-weekly or monthly. It gives me the option, okay, to do weekly, bi-weekly, or monthly. So if you get paid every other week, okay, do it bi-monthly, bi-weekly. If you get paid once a month, do it monthly. but consistency is key. All right. So let's, for the fun of it, let's start out with something interesting. Let's start out with 10,000 bucks, and let's put in $100 a week. Okay, weekly. Now I'm showing you how to get a safe, predictable, consistent 1% per week. So let's change the percentage to 1%. Easy enough. When do I want to make the right deposits? This one doesn't really make that much of a difference between the beginning of the time period. Like if it's every week, it'll be on a Monday. If it's at the end of the week, that anyway, besides the point. Now, time frame. Let's look at 10 years. Okay. Now, next, it's going to compute the investment. All right, what it's going to be worth. Does anybody have any clue what it's going to look like? $10,000. Starting out with $10,000, depositing $10 a week. Anybody want to write down in the chat, see what it looks like? Can you show us your performance, January 1st balance, current balances? No. What's the best? Oh, I forgot that one. I didn't get that one. What's the best stock option to buy right now? I don't buy. Sorry, dude. Costco is rising membership costs. Okay, lovely. You buy 1,000 shares. Stock sometimes. Oh, come on, 800,000 somewhere. Okay, I'd like to have 800,000. NVR, never heard of them. Downloading Schwab, Windows, blah, blah, blah. Professor Dividend. Cool. I like that name, Professor Dividend. Okay, so I'm just going to give you a rough idea. All right, so let's go over it again. Weekly compound calculator. We're going to start out with 10,000 bucks, put in $100 a week. All right, now I'm showing you how to get a safe, predictable, consistent 1% per week. Intel is paying dividends soon. Okay, Natalia, how are you? Now, I'm going to do it for 10 years, and then we're going to see what that $10,000 turns into. You see the number? $3,523,000. 10,000 starting out, depositing $100 a week. Okay? Who's that? Natalia. Hey! Did you see the numbers? $10,000, put in $100 a week, 1%, 10 years, 3.5 million. Okay? How about we put in $105 just to mess with you? $105 a week. Yeah. That's an extra $100,000. That's $3.6 million. I like that calculator. It's pretty cool. So I got a weekly compound interest calculator that I created. And for those of you who want to do monthly, you can do monthly. Same thing, except for this compounded monthly. Okay, so do the exact same number, 10,000. Put in $100 a week. Interest rate. I'm going to put 4 because 1% per week. Monthly be 4. And 10 years. $2.3 million. I want to do some of your option contracts, but I only got 1,000 free cash. All right, Johnny, just don't be in a hurry. Do some dividend capturing. Their stock's rising. If you're making 50% returns a year, you'd be one of the best investors. Not a chance. It's presumptuous to think you know who I am, but okay, you believe whatever you want. Okay. All right, we don't need to see this anymore. Dum dum dum. Back to the home page. All right, there we go. All right, let's go back to our trading again. Calvin Hill. Did I miss Siri? No, Jess, you didn't. Let's do Siri right now. Jess been very patient. S-I-R-I. Okay, so first thing I want to look at with Siri, $3.60. The closest one's going to be the 350. $3.50. Now I'm losing 10 cents right off the top because I'm buying it at 360, selling it at 350. Okay. We're collecting 23, so I take the 10 cents off of there, which means I'm only making 13 cents per share. Okay, so 13 cents per share. Johnny, you get 1,000, okay. Let's do some calculations. Okay, 13 cents a share, right? And the purchase price is $3.60. That's 3.6% return, Jess. Okay, that's if you're getting it now. Like first thing tomorrow morning, 360. Sell off the 350s, collect 23 cents. Okay, the math is always the same, but these numbers are going to change. Presumptuous, you are the one saying you're returning 1% a week with no dollar figure to prove it. I hate fucking stupid people, really do. Okay, count right here. Let's take this. Profit and loss year to date, 48,000. What's the account balance? Not that one. Net liquid, 140. Okay, I started the beginning of the year at 117. All right, I profited $48,000. That's over 30%. So to you, buddy. Ooh, I shouldn't have done that. So you can use the 1% weekly gain to use as a deposit. Whatever, you can do whatever you want with your 1%. Okay, safe, predictable, consistent 1% per week. Did you like that, Hollywood? Some people, they just like you've never been, dude's never been here before. Okay, and the first thing he comes out and he insults me, saying, "Yeah, right, whatever." Okay, we're on Siri. Okay, so first thing I want to do is check out the numbers. 360. I can sell it for 350, which I'm losing 10 cents. We already did that. It's at 23. We take 10 cents off there. I'm walking away with 13 cents on a $3.50 stock. Okay, that's a nice little profit for the week. So here's the thing. First thing I want to see. Where's the high? Where's the low? Where was it? Where is it? What direction it's going? Okay, great. This is where it's going. That's the 1 year. It's not at the high. It's not at the low. It's somewhere in between. Great. Now I want to look at the 90-day. I'm enjoying the 1%. Yeah, okay. Some people can't help but be negative. Yeah, I know. I shouldn't let them get to me. Most people don't usually get to me. All right, so let's take a look at the last 90 days. Okay, first thing I want to see, where's the high, where's the low, where was it, where is it, and where is it going? Okay, we can all see what's happening there. That's the 90-day. Let's look for the pattern. Okay, long sweeping moves, like 2 weeks, 1 week, 2 weeks, 2 weeks, 2 weeks, 1 week, 2 weeks. So there's a pattern there. So you look for the pattern. Great, there it is. Now, the last 30 days, just give us an idea of which direction we're going. Okay? Now, 30 days ago, here we are. Up, down, up, down. Okay? Here's your 30-day, not a 30-day bottom, but a bottom. Here's your 30-day bottom here. She goes up, pulls back. 2 days to the upside. That's my cue to jump in. I like 2 days to the upside from the bottom. Now, she keeps on going, and she hits the high, the 30-day high. Well, what happened after the high? Well, we had profit taking. Here's the bottom right there after the profit taking. 2 days to the upside. What else of an invitation do you need? I'm enjoying minimum 3 or 4% a week. Damon, way to go. I like that too. I like 3 or 4%. Now, I got 6 different accounts. I only share 2 of them with you guys. Okay, one account is up over 30% for the year. The other account's up over 60% for the year. All the trades are online. You can check them yourself. The buy orders, the sell orders, the profits, all that kind of stuff. It's all available online. You go check it yourself. I'm not hiding anything. All right, where was I? So Siri, let's take a look quickly. I'm under 20, doll. Wow. All righty then. Seasonality. That's what we want to look at. What does a stock normally do this time of year? Okay, you all know the blue line represents this year. The red line is 10 years worth of data. So I want to find out what it's doing now, which is here. See, we're in July, from here to there. Look at the big spike. This is 10 years worth of data. There's the big spike right now. That's what we're enjoying. Could be. It's not guaranteed. Is your website functional now? Yes. Well, it's not 100% functional. It's still a little clunky. So, get on, take a look at it, send me an email where the clunks are. Clunky, tell me where the clunks are. Can you have multiple accounts with Schwab? Yes, you can. Simone, do you trade just options or something else? I buy the stock and do the options. That's all I do. Reverse split is coming this month on Siri. Okay, you got it. Blah, 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 blah. Okay, so that's what I'm looking at. So the question you need to ask yourself before you cast judgment, like some people, does it make sense? Okay. Second question you need to ask yourself, do I like Siri? Well, I like Siri. Do you know why I like Siri? Siri's not on my list. Siri is on oh my goodness. What the hell's that guy's name? Warren Buffett's list. I've been liking JEPI. Yeah, I don't like JEPI. Warren boy, yep. Okay, so if it's good enough for Warren, it's good enough for me. And did you see what it's paying out next week? Come on, 3.6% on one of Warren Buffett's stocks? Why not? I've been installing T now over 5 minutes. No idea what that means. Tortapasa. I have no idea why you're asking why. JP Morgan. I'll write it down. We'll take a look at it. Probably not today because we got way too many stocks to take a look at. You guys hold up on the questions. We can go through them quicker. Can you walk me through how to find the EX date calendar on Thinkorswim? I have my account open. Nathan, hold 1 second. I got a list of $20 stocks. Yeah, there's a bunch of those. JEPI, why? No. Why? Really? You don't ask that question? I can tell you real quick. JEPI. It's a monthly. No. You want me to go deeper? Or other than the fact that it's a monthly and it's a waste of my time? Okay, I could go into the details and tell you why it's worse than a waste of my time, but I'm not going to. I'm going to go on to AIG. That's next on the list. Interesting. The chart looks interesting. Oh, Les, how do you have a calendar or EX date posted somewhere? Yes, I do. Every Sunday night, I send out a list to those in the morning trading group. All right. Uh-oh. I was just going to show someone something. Oh, the dividend calendar. Okay. So, if you are on Thinkorswim, monitor, trade, analyze, scan, Market Watch. Okay? Click on Market Watch. Right underneath Market Watch, quotes, alerts, visualize, financing rates, calendar. Okay? Quotes, alerts, visualize, finance rates, calendar. Okay? Once you get to the calendar, this little cog or this little wheel, this little sunshine, you click on that, and this takes a list, some of the lists that you may have available. The public lists by industry, the top 10, losers and lovers, blah, blah, blah. I don't pay attention to any of that stuff. I look at the personal list. Okay? These are my personal stock lists, companies that are over 100 years old. Dividend aristocrats, dividend champions, dividend contenders, dividend kings, Warren Buffett's list. Okay, my old list. This is a list I've been working on for the past 20 years. Okay, once you do that, they pop up in the calendar. Each individual list, and it'll tell me which list it is. Okay, calendar spreads. You might like this list. This is everyone's favorite list. Warren Buffett's list. Okay, whenever I get to a Warren Buffett stock, never even question it. If it's good enough for Warren, it's good enough for me. All right, so let's go to the next stock on my list. Not my list, your list. AIG. Okay, first thing I want to do when I take a look at AIG, it's over 100 years old. 77.90. The 78s between 50 cents and 160. Now, I don't like it when the market maker does that. Okay, they put the numbers so far apart. See, the last trade was 76.96. It shouldn't be $1 more for the bid or the ask. Okay, but tomorrow these numbers will get a lot closer. They usually stay between 1 cent and 3 to 4 cents difference. Okay, same thing with the options. There's usually not that big of a spread between the two. But still, if I get my 1%, if I'm buying it for this, selling it for this, I'm getting my 1%, great. Then I want to move over to the chart. High, low, where was it? Where is it? What direction it's going? Okay, it's not at the high and it's not at the low, somewhere in between. Great, let's go to the 90-day. I'm looking for two things. High, low, was, is, where is it going? Great. Now, what is any predictable movement? Hey, I got Thinkorswim installed and I'm logged in with Schwab. I'm trying to follow along. Hey, Johnny. All righty. High, low, we already did that. Look at the pattern. Not a huge pattern, but look at the slow incline, like 1, 2, 3, 4 weeks, 1, 2, 3, 4, 5 weeks to the bottom, and then 1, 1, 1, 1, 1. Okay, not huge, but you can see some kind of movement. Okay, last 30 days, most important, because I want to know where she's going to be in the next 5 or 10 days, and it's going to be a no. Okay, down, up, down, up, down, up. It's at a 30-day high. It's a no for me. I don't like buying at a high, waiting for it to get higher. Standing on a ladder, waiting for a taller ladder, it just doesn't work for me. Okay, what I would do is once it finds its high, okay, and it should be soon because it's at a 30-day high now. The people who bought down here, okay, down here, I'm going to say, hey, I'm taking that profit and running. Okay, so I would wait. As soon as it finds high, turns around, comes back down. That's what, 2 weeks. So I'm going to write AIG in my book for 2 weeks from today. AIG. So that way in 2 weeks, we'll take a look at it, and more than likely, it might be at a 30-day bottom by then. I'm interested in identifying a new long-term stock. What do you recommend? Okay, Brand, I don't recommend anything. Inspire me more. One of your rules is buying 2 weeks before the EX date. How strict is that of a rule? I have some leeway because AIG, if the numbers all look good and the option was and the premium was good, I might think about it because AIG is on my list. It's just not paying a dividend this week. Okay. So everything always goes by the numbers. Where is my safest bet? Where is the best place to put my money for this week? Okay. Number one, does it pay enough? Number two, is the timing right? They kind of go hand to hand. Do you have other accounts? I got 2 requests from your other accounts. Okay, Renee, I don't have any other accounts. Okay, there's 27 people pretending to be me. I'm a little flattered, but I feel bad for you guys. They get bombarded with, emails, texts, and say, hey, I got a great deal for you. No, you don't. Not from me. I tell you, you want to talk to me? Send me a phone number. I'll give you a call. I see if it's a good stock, the numbers pass with flying colors, then it's possible. Correct, if the timing is right. Okay, up, down, up, down, up, down, up. Okay, it's at a 30-day high. Now, some people say, well, the stock is rising, you should buy it. Yeah, you're going to buy it, and then someone it's going to turn down and go the other way. Yeah, I would prefer to buy it at a low because if you haven't noticed, stocks go down. Oh, wait a second. Then they go up. Wait a minute. Then they go down. Hold on. Then they go up. Really? Then they go down. Then they go up. That's all they do. They go up, they go down. Buy it at the right time. A good stock at the right time. And if the numbers work, you can get 1% a week. Safe, predictable, consistent. All right. So that was AIG. I like AIG, but not this week. Ooh, Intel is next. I like Intel. I think I sold my Intel 2 weeks ago. INTC. Okay. Quick glance at the chart, not a problem. 33.54. So the 33.50s That's a 2% trade. See that? 33.50. 1% of 33.50 is 34 cents. This is going for 72 cents. That's more than 2%. Brand, just in case you were wondering, okay, a 2% trade like this, that comes to over 100% per year. But you got to ask yourself the question, do I like Intel? Do I like Intel at this price? Does it make sense? GSAT, please. How about no? Never heard of GSAT. I've been doing this for 20 years. If you think that something got by me, great. $1.33. How can you possibly tell me a company that pays $1.33 has 20 years of increased dividends? Hell no. Now, Apple is not on my list, but Apple's on Warren Buffett's list, and it's a no. Okay? The high of the year was yesterday. Way too much profit taking waiting to happen. Roku has not been around for 20 years. It's an automatic no. Okay? How much is current price? Fran, I have no idea what you're talking about. I like Intel. All right. Walgreens. We haven't gotten to Walgreens, but we are going to get to Walgreens before the night's over. Trust me, we're going to get to Walgreens before the night's over. Got to be Warren Buffett, yeah. Okay, thanks for the insight. You're welcome. Don't get me wrong, I like Apple. I do. But at the right time. This ain't it. I don't even care what the numbers are. Right? Next on the list, 3M. 3M. Nope. Okay. Look where it is. Okay. 30-day. It's at a 30-day high at the moment. Okay, so we're not even going to waste our time with it. What about Amazon? Big uck. No. Amazon does not pay dividends. I'm going to get a sign made right here, right up top. And it's going to say 20 years of increased dividends and weekly options only, please. Yield Max, Linda, no. TNL, no. MUFG, no. This is very complicated app, and I cannot get my chart to look as yours. Okay, Johnny, DM me with your number. I'll walk you through it. It's really not that difficult. Once you get it set and once you see how it works, easy. Okay, my 9-year-old daughter can figure it out. I had to show her. Once I showed her, once you see something, you can never unsee it. Okay, SQ, no. AMD, ooh, AMD. We'll look at that one. AbbVie, ooh, we looked at AbbVie yesterday, and FedEx. AbbVie. Verizon. All right, Verizon's on the list already. ENPH, no. Okay, FedEx is on the list. UPS is on the list. All right, next on the list to take a look at MDT. Medtronics. Oh, wait a minute. What's looking at 3M? No, 3M was a no. And here's the reason why 3M was a no. This is the reason 3M's a no. It's at the 30-day high. Okay, I don't do, buy high, wait for it to get higher. No. ENPH, no. Uber, please, no. You cannot tell me, possibly, Uber is more than 20 years of increased dividends. They've been profitable for 20 years consecutively. Do you comb through all your list every week to find trades? Inspire me more. Absolutely no. All right, hold on. All right, now, this week I picked up 2. Last week I picked up 1. Next week I'm going to pick up 3. Okay, so next week I'm going to be looking for 3. Next week we're going to be in the 11th of July. Okay, I like to buy 2 weeks prior too. So we're looking at Ford, Lowe's, Bank Mellon, Pfizer, and Kinder Morgan from this particular list. Okay, then I'll open up another list. Okay, here's another list. Ford, Lowe's, Fast, Pfizer, BX, that Baxter, Morgan Stanley, and Texas Instruments. And then I have a bunch of more lists of good quality stocks. We get the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then Warren Buffett's list. I have plenty to choose from on a weekly basis. So when I'm looking at this week and this week only, I have no desire to look at this. Look, Wells Fargo, Intel, Valero. I have no interest looking at these. These are all good companies. There's no point in me looking at them if they don't have the dividend coming up in 2 weeks, because the stocks have a tendency to go up before the dividend. I like 2 weeks before the dividend. If all the numbers work, why would I want to wait? See, what you don't understand is I value my time. It's called the 10-minute trader for a reason. Okay, I'm going to look at these. I'm going to pick 5, and I'm going to be done with. It's really not that difficult. Once I figure out what stocks I'm looking at, I'll put it into the trade grid. Okay, Ford's one of them. Ford's going to be a no. Okay, is that a 30-day high? Automatic no. Next one, Lowe's. Easy breezy. LOW. No. See the big jump right here? That's going to be a no. Fast. Is that Fast Terminal? How did that one get in there? Oh, I know how that got in there. Pfizer. PFE. PFE. That's going to be a no. Another 30-day high. Okay. 30-day high. Yeah, no. And I'll just go through that until I find the 2 or 3 that I'm picking up. Is your list on your website, Jessica? Yes, it is. So what time frame do you trade for? 5 days. That's it. I like to buy on a Monday, sell on a Friday. Okay? Now, the way I do it, okay? I'll just try to explain this. Okay? I'll take my stock list and I'll look at only 1 week, the ones that are up for consideration. When I say up for consideration, my morning trade. Sydney, how's it going over there, Sydney? And D boy Joe Yodi Gosh. Okay. Forget where I was. Imagine that. I'll check the numbers. If the numbers work, great. Does the chart tell me? Great. Then I'll jump in. I'll buy it on a Monday, sell the covered call on a Monday, and hopefully be out of it by Friday. Does it work all the time? No. Does it work most of the time? Yes. What do you look for when buying? Interesting question. What I look for is Morgan Stanley super sweet in bonuses. I honestly have no idea, but Morgan Stanley is on my list. Do you sell calls? HD, yes, I do. Okay, so what am I looking at when I'm buying? Consistency and increased dividends. Or you can say consistency and profitability. You don't buy calls? No, I do not. Away, I have no idea what away means. The week you just looked at is 724, 728. Don't a lot of those end up under 10 trading? If you're also looking, you'll notice that it's July 2023. Okay, but if I go to July 2024, you will see a lot of them are missing because it's so far out, it won't post. HC, so how much percentage gain of your investment do you make per trade? It varies. My goal is 1% per week. So hypothetically speaking, all right, if I have an account that's $100,000 in it, I want to get $1,000 a week. If my account is $50,000 in it, I want $500 a week. 1% per week is my average. Are you teaching trading? Yep. Teaching. Yep. All right, so that's what I like. That's me. Let's go back to the list. What's next? Ooh, Devon Energy, DVN. I like that one. Whoops, not that. DVN. Nice. Quick glance at the chart. Okay. What am I paying? 46.66. The close one is going to be the 46.50 or the 47. 46.50, I'm losing 11 cents. Take 11 off of that. Yep. Well, the 46.50 is giving me 1%. The 47, not quite. Okay. High, low, where was it? Where is it? What direction is it going? It's neither the high nor the low. It's kind of in between, so I like it. So last 90 days. Okay. High, low, where was it? Where is it? What direction is it going? Ooh, look at this last 30 days. I like that. Look at the pattern. Up, down, up, down, up, down. It's like a week and a half between each one. Okay. Always look for patterns because we are the buyers and sellers. We are the ones who make up this crap. Okay. We decide if it's too high and we decide if it's too low. Okay. Now, last 30 days right here. Nice. That's pretty plain to see. Okay. High, low, up, down, down. Here, it should be going to the upside. Okay. So I'd be waiting for one more green day. I don't really like, well, they are kind of all. Now, this is the new bottom right here. If you take a really close look at it. 45.49, 45.52. Okay, so 45.52, 45.49. So there's a new bottom right there. So I like 2 days to the upside. Okay. Tomorrow, Friday, Monday, maybe Tuesday. I don't know. Keep an eye on this one. I'm gonna write it down. DVN. Yeah, it's already written down. Imagine that. Hey, 86, dude. Nice of you to show up. I'm new. I would like to learn. I'm good with moving money around. Well, that's cool. I DM'd you with my number. Cool beans, Johnny. Let me know if you want me to call tonight or tomorrow. I usually don't go to bed like 1 or 2 after this. Do you have to own the stock on the EX date or business day prior? Flipper, I'm not quite sure what it is you're looking for. What are you looking to attain? Okay, I don't like going near the EX date if I don't have to. I'll give you a quick example. Okay. Here we're looking at Dell. Okay. Dell Computers, 44-cent dividend. Announcement date, EX date, date of record, payment date. All right. Now, if the numbers work and the charts tell me okay, I want to buy this one on the 8th. Okay. 2 weeks prior on a Monday. Okay. Now, if I buy it on the opening of that day, let's find out exactly what it was. The 8th. The 8th, right there. The opening was 46.59. Okay. 46.59. I wouldn't have got it anyway because, see, on a Monday, see, she was up and she was coming down. I'd be waiting for the bottom, which Monday was a bottom, but apparently it dropped again today. But that's neither here or there. Okay. If I buy it on a Monday at the opening price of the day, if the charts are looking good, I will collect the premium. Now, the premium will be more than 1% of the purchase price. Okay. Now, when Friday comes, I either hit my target or I don't hit my target. If I hit my target, I'll be back into cash on the 15th. If I don't hit my target, I will keep the premium I collected on Monday, and then I'll bring those stocks to the 15th, and I'll do the exact same thing. If I don't hit my target here, I will take that money, thank you very much, bring the stock to here, get a third premium, get the dividend, and hopefully, eventually, I will continue to do that until I hit my target. At this moment in time, the purchase price on Dell, 46.66. Okay, so if I buy it at 46.66, I'm looking to make a profit off of it. Now, if I sell the 46.50s, I'm collecting 63 cents. I will continue to hold on to that stock until it sells at 46.50. That's just it. Never buy something you don't want to hold long term. Never sell at a loss. 20 years or more of increased dividends, weekly options, and then make sure the numbers work. The numbers. So confusing. Amish Matthew. Anish Matthew? Okay, this was created for a 9-year-old little girl. If you can't grasp it, then you probably shouldn't be doing this. You're buying a good quality stock. You're selling someone else the rights to buy it from you for the exact same price you paid for it. How can that be confusing? If I'm buying it for 46, I'm going to sell it for 46. How can that be confusing? All right, I'm buying it for 46, selling somebody the rights to buy it from me at 46, the same price I paid for it. I'm collecting a premium. Okay, I just want to make sure I'm buying it at the right time. I don't see what's confusing about that. So you get paid the premium every week. Exactly, Murray. How do you make? Oh my God, did he really just ask me that question? How do I make money? If I'm buying the stock at 46, if I'm selling it at 46, here's my profit right here. That's my profit. I'm buying it for this, selling it for that. This is what I'm collecting. That's my profit. Okay? That's where I make my money, my 1% per week. Do you have a referral code for Charles Schwab? I wish I did, Sheila. I don't. Sorry. So you make the premium off of each contract bought from you. Exactly, HD. I sell somebody the right to buy it from me for the exact same price I paid for it. That's like me running to the store, say, hey, Amish, I'm going to the store. Do you want me to pick you up anything? Yeah, got me that. Okay, fine. When I come back, you pay me. Same thing. You're buying it and then you're selling it. And you're getting this for your time and effort, the premium. Buying it for 46, selling it for 46, I'm collecting that. That's my profit for doing what I'm doing. And it's 1% per week or more on average. So you make $63 in this case on a single sale. Yeah, let's do the math. Okay, so at the 46.50, okay, the 46.50 right there, get this one out of the way. Confirm and send. Okay, so 10 contracts. All right, make it easy for you. I'll do one. All right, we'll do just one. Okay, 100 shares. Okay. Buy one covered DVN. 19 July 24th. That's next Friday. Okay, next Friday. the the 46.50 call option and the stock. So I'm buying the stock and I'm selling the option at the exact same time. Let's get this right out of there. All right. The limit order, whatever it is, to open to open. Why does it say to open to open? Because there's two orders. I'm buying the stock, that's one order, and I'm selling the option, that's a second order. All right. Now, the rest of these numbers. The break even, 45.77. That's my break even. So as long as she stays above 45.77, I'm making a profit. Well, right now it's at 46.66. Well, if it goes up, I make money. If it stays the same, I make money. It can even come down a little bit and I'm still making money. As long as it's above 45.77, I'm profitable. Okay, if not, I just hold on to the stock and I do it next week until I hit my target. Really not that difficult. Here's the profit, and this is what it's costing me. Okay, my maximum profit, $73. Okay, my investment in this one trade example, 4,577. Okay, what is that? That is 1.6% or 1.59. Okay, 1.6% for the week. Remember, I'm showing you 1% per week, safe, secure, predictable. Does it happen all the time? No, it happens most of the time. Day trade, wait a week for long-term investor. Yeah, I'm not a long-term investor. Sorry. Recon, James, you need to get a referral code. They offer. Oh, I didn't know that. Badfish, can you recap the top ticker symbol for Monday, please? Badfish, I didn't say any. Sticking to your rules. What's the biggest mistake most people make, and how do you lose money? Sticking to my rules. The biggest mistake people make is listening to the greed monster on your shoulder. Okay, so if you're looking at a trade, okay, and it's saying 1%, but one strikeout is paying 2%, most people are going to go with the 2%. And then when the stocks go down, people sell at a loss. Okay, so the 5 rules are very simple. Never buy something you don't want to own long term. Okay, if you think it's going to go down, well, you're right, it's going to go down. If you think it's going to go up, yeah, you're right, it's going to go up. That's all they do. They go down, they go up. They go down, they go up. They go down, they go up. That's all. They're just a freaking seesaw. That's it. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends and weekly options. Then make sure the numbers work. What are the numbers? What am I buying it for? What am I selling it for? What is my profit? And is the timing right? That's it. It's really not that difficult. I mean, it was created for a 9-year-old. It had to be simple, safe, predictable, consistent, and no way for her to lose. If she loses money, that means she did something wrong. You lose money on WBA. Now, I told you we're going to get to WBA, so let's go take a look at it. WBA, Walgreens. Now, we've been looking for the 30-day bottom. All right. Now, 30-day bottom, in my opinion, is followed by 2 up days. How much would you need to deposit to start doing this? $5. Here's a mistake I've made. After initial trade, if the stock goes down, selling a future call too low. Yep, that happens. All right, so we've been searching for the 30-day bottom with Walgreens, because Walgreens has been dropping. Okay, they're cutting 25% of their stores. They get 8,700. Okay, so you get rid of, you trim the fat, you get rid of the losers, however you want to look at it. Underperforming, not living up to their potential. A rose by another name is still a rose. Thank you, very helpful. Then when the stock goes back up, you need to chase it, not lose money. Yeah. Well, Secretary, it's part of the game. If you're going to dance to the music, you got to pay the fiddler eventually. Okay, not every trade can be a winner. All right, so let's take a look at the numbers. 1144, well, the 1150s, 24 cents. That's more than 2%. Okay, why is Walgreens on my list? Well, because it pays me 2% every week. Yeah, you'll need to have enough to get 100 shares. Yeah, at least 100. There are other trading strategies that are very similar to this. Okay, this is just the next step up. There's another one called dividend capturing. There's another one called dividends on steroids. All right, so the numbers work. Great. What's the chart telling me? High, low, where was it? Where is it? What direction is it going? All that kind of nice, neat, fun stuff. Okay, now it looks like it's at a bottom. If you take it really close, it's bounced off. We got 2 days to the upside. Is 200,000 enough? 200,000 would probably give you $2,000 a week or more. I need WA to go back up to 18. Alrighty. Or you can buy it now and then dollar cost average down. All right, last 90 days. High, low, where was it? Where is it? Where is it going? Look at the big drop here. When this thing dropped here, I bought a bunch here. Okay. Now, we're waiting. We've been waiting and waiting and waiting for 30-day bottom. There it is right there. It showed itself the other day. Anthony Poe, yes, sir. I have no idea what that means. Last 30 days. Here we go. Okay, you can see it clear as day. Here's your 30-day high over here. Okay, she drops, big drop. Now, the 30-day bottom was 2 days ago, 2 days to the upside. Love it, love it, love it. Just got here. Chuck, what chart is that and what stock? Walgreens. But this is extremely interesting for consistent gains. What I do is not consistent and very risky. Oh, HD, okay. Is T stock good? Yes and no. Me thinks WBA will be a longer recovery cycle due to the large losses. Could very well be. Okay, but I like working on the numbers. Anthony, are you bullish on Walgreens? We were just waiting for the bottom. Thank you. Secretariat, I will stay away from Walgreens for a while, regardless of current increases. Yep. I get killed on decay. Weekly trades. All right, Jamie, I can't help you out with that one. Starbucks is on the list. We're going to get to it, but probably not tonight. Okay, so I like Walgreens. All right, the numbers work. Okay, the 30-day high was here. 30-day bottom is there. 2 days to the upside. Okay, could it go down again? Yes, it could. But this part of the game. Okay, never buy something you don't want to own. I buy ODTE, SPY, and Qs. Yep, good luck for that. I don't do those. Too inconsistent. If you're holding stock at loss, do you continue to sell calls? Yes, I do. CMG. CMG is a no. If you are a seller, decay works in your favor. Well, that's what we do here. We sell. Well, I sell. You guys got to figure out what works best for you. This is what works for me, and that's all I'm sharing. I'm sharing what works for me. It may work for you. It may not work for you. It's not for everyone. You're not going to get rich overnight with this strategy. It's slow. It's boring. It's consistent. It's monotonous. All those kind of nice, neat, fun stuff. Vegas. Why did all the tech stocks get hammered today? Don't know. Don't care. But isn't this too slow? HD, I'm looking for a safe, predictable, consistent 1% per week. That's over 50% per year. 10 minutes of my time per day gets me 50% return of my portfolio. That is plenty for me to live on. You really need to get the greed monster under control before you lose money and make mistakes. What works for you? Yep. CPI. Nope, don't even bother with it. CPI data. Yeah, I really don't care about CPI data. Okay, CPI data has got nothing to do with facts. 1144. Okay, the 1150 is going for 24 cents. That's more than 2%. Here's the 30-day high. Here's the 30-day bottom. 1 day to the upside, 2 days to the upside. CPI has absolutely nothing to do with that. Okay, the company's been in business for over 100 years. There's a Walgreens in almost every major city in the United States. Okay, they even have some over in Europe. Granted, they are cutting off 25% of them. Great. You cut off the 25% and see what happens. This could be the low of the year. You only make money in the stock market when you buy low and you sell high. Okay, not when you buy high and wait for it to go higher. That doesn't work for me. Yeah, I'm retired. I have no desire whatsoever to go back to work. I don't. And I don't pay attention to the CPI. I don't pay attention to talking heads on TV. I don't pay attention to hardly anything. But what I do pay attention to, how consistent are they with the increased dividends? They change the list every single year. The Dividend Kings, there's 54 of them, 5 decades of increased dividends. Oh, next year there might be 55, there might be 52. I don't know. When that happens, I will take a look. Dividend Aristocrats, same thing. They balance out the list at the end of the year. It's either performing or it's not performing. Okay? Out of the 9,000, let's do that. I said we might do that. Let's get to it. We're actually going to go look and see how many stocks there are. For that, I go to FinViz Stock Screener. Holy cow. 9,593. They added a whole bunch over the past couple of weeks. Do you have a strategy guide? Kinda. All right, Robert, most people just join the morning trading group and they just watch over my shoulder, ask me questions. Oops. CPI was good, so big boys sold tech, blah, blah, blah. Thank you for showing me WBA. You're welcome. Bro, he asked why tech's down. Okay. I honestly don't care that tech stock's dumped. The only thing I care about, high, low, am I making money or am I not making money? How often have they increased their dividends? If you, all right, hold on. What am I doing? Here we go. Okay, so let's take a quick gander. 1 year chart. Here's where it was high. Here's the low. Here's the flow right here. What does one day have to do with all of this? Absolutely nothing. What I can buy it for, what I can sell it for, what rate of return am I getting this week? What does the CPI index have to do with that? Absolutely nothing. Rule number one, never buy something you don't want to own long term. I get no problem whatsoever buying. I actually own some Walgreens. I have no problem whatsoever buying Walgreens and holding on to it, even at the price it's at now. Well, especially at the price that it's at now. This is the low right here. The other day was the low of the 7-year period. This hasn't been this low in a decade. You make money when you buy low and sell high. The company's been in business for over 100 years. I really don't think they're going anywhere. Yeah, they'll cut some fat and they'll get some growing pains, and then they'll go from there and they'll move on. Anyway, next on the list, Vegas. Why? Why Vegas? What are you saying why to? Why did all the tech stocks get hammered today? Okay, you're asking me a question. Okay, Vegas. You're asking me a question that's totally irrelevant of my time. Because why they went down? I really don't know. I really don't care. And that's what you're having a hard time comprehending. I don't care they went down. They're not on my list for this week. Okay, if it's on my list for this week, yeah, I'll pay attention to it. Okay, I can't pay attention to everything. There's so much information out there in the world. If it's important, I'll pay attention to it. CMI has nothing to do with what I'm working on, and the tech stocks, nothing to do with what I have. Okay, so what do I have at the moment? AEO, Bitto, Kohl's, Macy's, MPW, Walgreens, and Wynn in this particular account. Nothing at all to do with tech stocks or the CPI index. So why do I care? Why would I waste my time on something that's got nothing to do with my current situation? Okay, if next week I buy a tech stock, then I'll want to pay attention to it. Okay, but at this moment in time, I don't have any tech stocks, and if I did, whatever happened today is what happens. Okay, rule number one, never buy something you're not okay with owning. If you want to buy a tech stock and it goes down, well, they always go down. Okay, up, down, up, down, up, down, up, down. Oh, wait a minute, what is that? Oh, it took a break to come and wash my car. No, it doesn't do that shit. They go up, they go down. It's all stocks do. Okay, you're gonna buy a stock, it's gonna go down. You're gonna buy a stock, it's gonna go up. That's all they do. They go up, they go down. Don't make it more confusing than it needs to be. You buy a tech stock, why do they go down? Because that's what stocks do. Stocks go down. Next week, you can ask me, why did tech stocks go up? Because that's what they do. They go up, they go down. Try not to make any reason of it. It went down, so what? Big deal. Never buy something you don't want to hold long term. If you have a difficult time with that, you shouldn't be playing the game. It's that simple. Okay? You make up your mind. Do I like Walgreens? Yeah, I do. Walgreens has been going down for the past 6 or 7 months. Do I care? No, I don't care, because it's been in business for over 100 years. So if I buy it here, if I buy 1,000 shares here at 32, and the dividend, what's the dividend? Let's say the dividend's 20 cents. Okay, if I buy 1,000 shares at 32, I will be collecting 1,000 shares of whatever the dividend is. Okay, now if the stock drops to 11, I still own the 1,000 shares. I'm still getting the 1,000 dividends. The company is still increasing the dividend every year. So why do I care if it goes up or goes down? I want to know where it's going in the next 5 to 10 days. That's it. I don't care. Let's just go on. Caterpillar's next. Woo! I like Caterpillar. Caterpillar. Ooh, quick look at the chart. It's not at the high, it's not at the low. Okay, the numbers. 332.25. The 332.50 is going for 360. That is over 1%. Okay, I like Caterpillar. Household brand. Everybody's heard of Caterpillar. All right. Now, for $3.60 per share, what's the chart telling me? Here's the high, here's the low, is where it was, here's where it is. This is the direction it's going. Okay. Last 90 days. Okay. High, low, where was it? Where is it? Where it's going? Ooh, look at that. 2 days to the upside after a bottom. Ooh, I want to see that. Okay. He was talking about CPI. Yep. I said, why? Tech had a healthy pullback, been running up too much. Okay, 100,000 can make you 50,000 a year doing this. What do you guys don't understand? Thanks, Alvin. Do you think it will take time before stocks going down again? Nope, I think stocks will go down tomorrow. Ooh, and I think stocks will go up tomorrow. I was talking with Mom, and the WBA book value is 15 bucks. Yep. Sorry, Walgreens isn't increased dividends. Yes, I know, but they've been in business for over 100 years, and they have increased their dividends at one point. It's a judgment call on that one, so I do bend the rules once in a while. I bend the rules for Apple. I bend the rules for Siri. Okay, Walgreens, I'll bend the rules for that because it consistently gives me 2% or more every week. And also, what were they saying? They've been in business for over 100 years, 8,700 stores. Okay, all tech. I missed that one. I missed some questions. Uh-oh, I missed some questions. All right, can I get a discount on Morningstar since I'm cute? Sure, why not? Okay, I thought so. Since there's an option table on the screen. Yep. Robert, is there anything I can learn the strategy you're using? Is there anywhere? Yeah, you can join the morning trading group if you want. Walk you through the whole thing. What company is it? Caterpillar. He is her every night. He's here every night, and he can help. Private. Okay. Thank you. 86. DeLuca, what do you call it? Absorb the information, writing covered calls. Yeah, YouTube, writing covered calls. There's a whole bunch of videos about that. Can you check SLV? No. Looks about to break up. Well, then why would I want to look at it? It's not on my list. WBA has got some poor management. Yep. Could go under. Don't think so. Not when you have 8,700 stores and you're cutting down 25% management if management doesn't change. Yep. Is to NCVY. Yeah, no. How many more questions? Oh, I'm almost done. 6 more. 6 more. Uh-oh. What do you think about the direction of the US dollar? Oh, don't get me started on that. That gets into politics. You know what we do politics. Can you please do EPD? Well, considering you said please EPD, enterprise prods, blah, blah, blah. Okay, let's take a look at EPD. EPD. First thing I want to see, because everything looked there, it's one of those companies I know it's not on my list, but let's take a look why it's not on my list. That's why not 20 years of increased dividends. Let's take a look at the dividends. 31, 32, 33, 34, 35, 37, 38, 41, 42, 43. Nice. Well, they have consistently increased their dividends. 10, 11, 12 years. That's it. Only 12 years of increased dividends on EPD. So that's going to be a question you're going to have to ask yourself. Is 12 years of increased dividends enough for you? All right. 29.25. The 29 is going for 24, and you subtract 25 cents out of that, that's going to be a no. Sorry, the premiums are terrible. Alibaba doesn't have 20 years of increased dividends. I know that because I actually have Alibaba in a different trading strategy. Okay, this is the only one I teach here for free. The only one. Okay, covered calls, safe, predictable, consistent, 1% per week. get about 50% per year. If that's not good for, if 50% a year is not good enough for you, then you're definitely in the wrong place. What do you think about Zap? Zap's a no. Infinite Sky. All right. I think dollar is going up with interest rates and bond yields. I don't think they're going to cut. All right. JP Morgan. JP Morgan is on my list. Vail is on my list, I think. Costco is a no. Okay, Costco's out of my price range. I like to stay below 250 bucks. Is there a holding period in order to receive the dividend? Yeah, 2 days. How much or what percent would you allocate to one stock in a 50,000 or 60,000? Okay. Take Nathan. Nathan, anytime I do Boson, Besson, I never even heard that. Yield max is a no. When I have my account, okay, if I have 5 positions, it's 20%, 20%, 20%, 20%. 4 positions, it's 25, 25, 25. It's just math. So if you have a $60,000 account, it's like 15,000 per trade. That's 4 positions. Yay! Let's hear about Vail. Why would I want to talk about Vail? $11.39. There's got to be a reason why I don't do Vail. There it is, right there. Okay, 12 years of increased dividends. Okay, let's take a look. Oh, here's another reason why I don't do Vail. Starts out at 59, 44, it's going backwards. 41, even worse. 14, that's atrocious. You start out at 59, a couple months later, you're at 14. Yeah, that doesn't work. Oh, wait a minute, it gets worse. 19, then 10, then 5. Yeah, no, the dividends are too inconsistent and they're all over the place. No to Vail. From what I've read, you can sell after the EX date and still receive a dividend. All right, Jess, you're kind of right and kind of wrong. Hold 1 second. Okay, so as I was saying, Jess, you're kind of right and kind of wrong. Let me explain. But I'm going to use graphics. All right. Dell. Okay. Dell right here, the 23rd. Okay. 4 dates to remember. 1, the announcement date. That's when the company announces it. 2, the EX date, 7/23, right there. The date of record. Ooh, this is different. 7/23, the same day. Okay. And the payment date. So 4 dates. Announcement date, EX date, date of record, and then payment date. So you have to buy the stock before the EX date. Sandra, how are you, Sandra, on Facebook? You have to buy it before the 23rd. Okay, so you buy it the 22nd, the 2nd, the 10th, the 9th, the 8th, the 16th, whatever, as long as it's before the 23rd. Okay, and then you have to hold it after the date of record. Whoever owns the stock on the date of record is entitled to the dividend. So it just so happens that this one, the date of record and the EX date is the exact same. It's not the same for every company. Let's take a look at Ford. Oops. But we do this. Lowe's. All right. That's the same. That's the same. That's the same. Wow, they must have changed. The EX date and the date of record are the same. That's weird. Okay, so they've changed it since last time. So as long as you buy it before the EX date, sell it after the date of record, you're entitled to the dividend. EPRT, no. Hey, Ford. Why was I muted last night? Heath Martin, I got 3 or 4 moderators. They do the muting, not me. Okay, so you must have said something that was disagreeable or not quite right. Let's get back to Caterpillar. CAT. So hopefully that answered your question. All right. So I really have no idea because I didn't mute anyone last night. So the moderators must have done that. So they must have said something. Floors. Clorox, CLX. I like Clorox. Okay, so we're back on Caterpillar. Let's finish up with Caterpillar before we do anything else. Okay. We've decided that if we buy it, it's our 1% right here. So if we buy it at 332.25, we sell it at 332.50, we get 360, which is over 1%. Great, that works for me. The high, the low, where was it, where is it, what direction it's going? Great, all that looks lovely. Okay, last 90 days. There you go. Up, down, up, down. Ooh, gap. Gap down, up, down, down, so on and so forth. Yep, look where we are here. I want to see this area right there because that's the last 30 days. That's what's most important to me. Yeah, Caterpillar looks like it's going to be a no. Okay, here we are 30 days ago. Down, up, down. Here's our 30-day high. Down, up, down. Yep, and then she jumped up. So look how close it is to the 30-day high. It's not something I want to get involved in. Not for 1% anyway. You need new mods. I asked to check Verizon and Walmart. Best way to find dividend stocks. CMG, Google. Okay, go to Google, put in, go to Google and you put in Dividend Kings List 2024, Dividend Champions List 2024, Dividend Aristocrats 2024, Dividend Contenders List 2024, Warren Buffett's List 2024. That is over 300 companies that have consistently increased their dividends, and most of them have options. Fascinating football videos. How are you doing? Okay, so Heath Martin, terribly sorry. Okay, I don't know what to tell you. You said you don't do stocks over 250. Caterpillar is over that. Is it on your list? Yeah, Caterpillar's on my list because it's a good freaking company. I don't trade it because it's out of my price range. But I do have people in my morning trading group that have more money than I do. So I do them the favor and I show them Caterpillar. At a quick glance, I say Caterpillar is way overvalued. Alrighty then. What are your top holdings that you don't sell? Infinite Sky, I don't have any. I am not married to any stock, any way, shape, or form. The longest I've ever held anything is 9 months. And that was Kimberly Clark. And I didn't do it because I wanted to. It just so happened to happen that way. What is, okay, that. All right, I'm up to date in the questions. Good. Caterpillar's done. JP Morgan. Ooh, JP Morgan's next. JPM. Nope. Okay, look where she is. Okay, here's the high of the year. This is where we are. Yeah, no thank you. HASI. Never heard of them. HASI. Yeah, that's going to be a no. Yep, that's a no. Eli Lilly. Ooh. Nope. Holy cow, 900. Intel. Didn't we take a look at Intel today? No, let's look at it again. It's on the list. Take a look. INTC. Ooh, ExxonMobil. I think ExxonMobil's on here. No, I'll put it down. XOM. PSEC. Lilly, very expensive. Yep. I recreationally use Osmopic, and it's becoming an addiction. How do I confront this head on? Buzz Lighthead can't help you out with that one. I have no idea what Osmopic is. Have we talked about AT&T yet? No, we have not. AT&T's not on the list. Well, it is now. There we have it. My thoughts on ETH. Guidance. No. Can we please look at BMY? Bristol Myers Squibb. I will write it down. why we probably won't get it till, whoa, it's 11:30, way past my bedtime. Holy Charlie. Ooh, let's take a look at Nike first. I actually have some Nike. NKE. All right, first thing I want to take a look at, the chart. Okay, it's bouncing off the bottom, so we found the bottom here. Great, we'll get to that. The numbers, 73.49 to 73.50 don't have it, so the 74s are going for 77. That's over 1%. Simple math, it's over 1%. Let's proceed. Sorry, is the bull run over for oil stocks? Buzz Lighthead, I honestly don't know. Okay, a year ago, high, bottom, direction, blah, blah, blah. Last 90 days ago. Ooh, check out that channeling action. Look at that, staying between 90 and 96. Well, actually between 92 and 96 for the past couple of months. Cool beans. Then you have this big gap down. Okay, remember this big gap down popped up right here? Cool beans. I bought a bunch right there. Well, because you buy when it's low. All right, so let's take a look at the last 30 days. 30 days, here we go. Right. 30 days ago at 96, topped out at 98. Okay, gaps down. Okay, here's our 30-day bottom yesterday. Okay, so today is an up day. Tomorrow, in my opinion, would be confirmation that the 30-day time frame is over. 30-day high, 30-day low, bounces up to the upside. I like that. It's 11:30, time for me to go. So I will catch you guys again tomorrow night. Now, for those of you guys that are in the morning trading group, okay, won't be in the morning tomorrow, 3 o'clock, it's Friday. Options are going to expire. I like to see where my position is going to end up. Alrighty, so you guys have a great night, and we'll catch you again tomorrow. Same bat time, same bat channel. Johnny, tell him what he's won. Woohoo! Alrighty, and now there we go. Finish. Done here. My Macy's expired. Dimon, we'll take a look at it tomorrow. Love it. And now, post. And over here, done. Alrighty, we got these people over here on YouTube. You guys have a great night. I will see you again tomorrow. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for that safe, predictable, and consistent 1% per week. Why isn't this thing charging? There you go. Whoops, not working. All right.